Hi everyone, welcome back. Today we're bringing you an explainer that really pulls back the curtain. We're diving into the advanced, behind-the-scenes financial strategies actually used by Robert and Kim Kiyosaki. We've got some incredibly fascinating insights straight from their longtime colleague, Andy Tanner. Now, if you think you know all their strategies just because you've read their famous books, well, stick around. It turns out there is a whole other layer we're going to discover today.
Okay, let's dive right into this. On our agenda today, we'll start by looking at what goes on beyond the famous books. Then we'll break down how to master your investor temperament. From there, we're going to explore the immense power of DebtCraft, followed by why you absolutely must prioritize cash flow over capital gains. And finally, we'll wrap things up by looking at why taking imperfect financial action is your most critical next step.
All right, Section 1, Beyond the Famous Book, The Insider's Playbook.
So it is absolutely vital to understand that true wealth building goes way, way beyond just passively reading a popular personal finance book. To set the stage here, I really love this quote from Andy Tanner. He shared that before he ever stood on these dazzling international stages alongside the Kiyosakis, he actually had massive imposter syndrome. I mean, he and his wife were literally just regular people, reading a single paragraph of Rich Dad Poor Dad out loud to each other right before bed. Transitioning from being just a reader to a true insider required a total shift in how he learned.
And, this brings us perfectly to the Kiyosaki method. Think about standard school learning. It's all about just hitting the bare minimums to pass a test, right? And we constantly want to insert our own opinions into the mix. But the Kiyosaki Insider Method, no way. It is an intense boot camp style of studying. When they study an author, they have a strict standard operating procedure. Absolutely zero personal opinions allowed. You don't get to insert your take on it. You have to figure out exactly what the author is communicating. It's this insatiable, ego-free dedication to learning that really serves as their true superpower. Moving on to Section 2, Mastering Your Investor Temperament, the Michelangelo Method.
Because here's the honest truth. All the financial knowledge in the world is completely useless without the emotional discipline to actually execute it. Tanner actually describes this process as joyful pain. Think of your personal financial development kind of like assisted stretching. When someone has your hamstring totally maxed out, it hurts immensely. But you get addicted to how much stronger and more flexible you feel afterward. Identifying and removing your personal weaknesses is a painful process for sure, but it leads to massive, massive growth.
And this brilliantly illustrates the mindset. Think of Michelangelo looking at a giant block of marble. He famously said he just saw the angel inside and cut away whatever wasn't the angel. As an investor, your education isn't about just packing more facts into your brain. It's about drawing your inner investor out. You have to actively chip away the marble that's getting in your way. Your fear, your greed, your inconsistency, and frankly, your ignorance. This really boils down to a highly capitalist mindset. As Tanner points out, you absolutely have to internalize your locus of control. You cannot blame the environment, the economy, or play the victim. If you're lacking success, you've got to look in the mirror. If it is to be, it's up to me. You have the ultimate freedom to get up in the morning and fix your flaws, regardless of whatever external circumstances you might be facing. All right, Section 3, the power of DebtCraft. Harnessing the flame. Okay, listen up, because this may be the most paradigm-shifting concept of our entire explainer. It completely shatters the mainstream advice about avoiding liabilities. You see, mainstream financial gurus often view debt as this terrible moral hazard. It's like playing with matches where eventually you are gonna get burned. But the wealthy insider, they view debt as a utility. Think of it as firecraft. Sure, fire can burn you, yes, but with wisdom, it can keep you warm and cook your food. Wealthy investors practice debt craft. They aren't just playing with matches, they're harnessing the flame.
To put this into perspective, if you look at how money can enter a system, it basically happens in 3 ways. First, you have operational income. You work, you provide value, but this is strictly limited by your physical production. There are only so many hours in a day. Second, investment gain. You sell a property, but this is limited by market timing and finding a buyer. But the third, borrowed capital. Using the liability column intelligently is literally the absolute fastest way to bring money into a system. And the crazy part, the volume is virtually unlimited once you actually know how to raise capital.
Which brings us to the ultimate insider strategy, shorting the US dollar. Look, we can't always predict where a specific tech stock is going to be in 10 years, right? But due to the fiscal realities of our country, we can very easily predict that the dollar will continue to lose value. So here's the playbook.
You borrowed those devaluing dollars. You turn that borrowed money into an appreciating, cash-flowing asset like real estate. And then, years later, you repay that loan with dollars that are worth far, far less.
So, what does this all mean? The crucial point is this. The real estate itself is just the mechanism. The true wealth, the actual alchemy happening here, is generated by understanding the guaranteed devaluation of currency and leveraging the incredible utility of debt. Honestly, if your liability column is completely empty, you just aren't utilizing one of the most powerful financial tools in existence.
Section 4. Cash flow over capital gains. Don't sell the goose.
So here, we need to shift our focus from how to acquire capital to how to strategically manage the assets that capital produces. A capital gain strategy relies entirely on buying low and selling high. If your gold hits $5,000 an ounce, you sell it. But then what? You have to frantically run around and find something else to invest in. It's exhausting. It's exactly like selling the goose just because its price tag went up. A cash flow strategy, on the other hand, dictates that you keep the goose so you can perpetually collect its golden eggs. That is how you create real multi-generational wealth.
And this creates what Tanner considers the true definition of compounding. It's a beautiful loop. You acquire a cash-flowing asset. You collect that cash. Then you reinvest that cash into acquiring more assets. You don't just want the aggregate on-paper value of your portfolio to go up. You want to physically multiply the actual number of machines producing cash for you. As Tanner brilliantly puts it, you buy a rabbit, you let that rabbit have babies, and then you let those babies have babies.
And finally, Section 5. Taking imperfect financial action, going from observation to execution.
We are officially moving from mere observation to actual boots-on-the-ground execution. Let's be totally honest with ourselves for a second here. We live in a world where passive edutainment provides a massive dopamine hit. I mean, it's very easy to sit here, watch this explainer, feel super smart, and then do absolutely nothing. But passive observation? It's just an illusion of progress. True adrenaline, real satisfaction, comes from active implementation, actually getting out there and generating real-world cash flow. So, what are we going to do about it? Here are some tangible, rapid-fire first steps you can take today. Go reread the foundational books, but do it without your personal opinions this time. Play the cash flow board game with your family to simulate the real world. Go download free tools at places like StockcastBonus.com. Open a paper trading account. Heck, go buy a single ounce of silver just so your asset column isn't totally empty. Or, you know what? Go out and intentionally make a mistake. Moving in literally any direction is better than just standing still. Now, what's really interesting here is that in finance, mistakes are rarely fatal. The American financial system, complete with its bankruptcy laws, is literally built from the ground up to allow for failure and starting over. Just like Rocky, it doesn't matter how many times you get hit. It's all about coming back. You can't be physically harmed by losing a little money on a bad trade. But I promise you, the lessons you learned from that mistake will be absolutely invaluable.
So I want to leave you with this final, provocative challenge. Are you just going to settle for another quick dopamine hit from passively watching this explainer? Or are you going to step up, take imperfect action today, chip away the marble of your own fear, and start building your own wealthy reality? The choice, as always, is entirely up to you. Thanks so much for joining me, Focused Learners, and I highly challenge you to start building today.